Welcome to Turning Hard Times to Good Times. I'm your host, Jay Taylor, and I'm really pleased to be with you again. I'm talking to you from New York City on this, the 4th day of February, 2020. I'd like to remind you that I write a newsletter. It's a weekly newsletter and a monthly, and I try to pick the best junior exploration stocks that I can find, and I'm telling you, I'm quite excited, notwithstanding today's down day in the gold market. I'm finding some very, very exciting stories, and we'll be talking to Chris Taylor, who is the president and CEO of one of those, Great Bear Resources. He'll be with me during the second segment of today's show. So lots of exciting things to talk about. Miningstocks.com is where you can go to sign up for my letter. ChenPicks.com for Chen Lin's letter, and he covers the mining sector and the biotech sector primarily. Those are his areas. And, of course, Michael Oliver, who we're really happy to say will be talking with us in just a minute or two. Michael's OliverMSA.com. It's where you need to go to catch up with Michael's work. And I want to thank all of you for listening to this show, making it one of the more popular shows in the Voice America Business Channel, and I'd like to encourage you to send along any comments you have, positive or negative, or something in between, to questionsfortaylor@gmail.com, questions, the number 4, Taylor@gmail.com. And, of course, we must thank our sponsors, because without them, there would be no show. Our sponsors for this week: Irving Resources, Sitka Gold Corp, Hannon Metals, Novo Resources, Great Bear Resources, Gatling Exploration, TriStar Gold Resources, and Lion One Metals. I've titled today's show, "With Quantitative Easing to Infinity, Is Deflation Even Possible?" Alistair McLeod, Michael Oliver, and Chris Taylor, as I mentioned, will be with me in just a minute. Today, we pose that question: is deflation even possible? If governments can create endless amounts of money out of thin air, why should there ever be a deflationary depression? You might remember President Clinton, when he was embroiled in his own impeachment process, questioned the meaning of the word "is." For Austrian economic thinkers like Alistair McLeod, who will be with us in the second half of today's show, to suggest that you have no monetary inflation when money is created out of thin air without limit by central bankers around the world is just as preposterous as President Clinton questioning the meaning of the word "is." Yet there can be no denying that because of massive debt, which is growing much faster than income, there is reason to consider the possibility of a collapse of prices across the board, at least for a short time, much as we saw in 2008, 2009. But then we saw what happened. Trillions upon trillions of dollars were created out of nothing. Many, if not most of them, found their way not only to allow the financial markets to stabilize, but to explode higher to the latest financial market bubble in an even more precarious debt bubble and unstable situation than we had arguably before 2008. Alistair wrote in his article, he wrote an article in January 23rd titled "Irrational Fears of Deflation," and then on January 30th he wrote another article titled "Estimating the Shape of the Coming Crisis." So in the second half of today's show, we will ask Alistair to explain to us why we shouldn't worry about deflation when clearly prices collapses that hurt a lot of people during 2000, 2008, 2009 is still fresh in the memory of many. Then if deflation isn't something we should worry about, I want to ask him how he thinks this existing bubble will play out. So we'll get some of Alistair's thoughts on those questions. In the second segment, just after our first commercial break, Chris Taylor, the president and CEO of one of the most, if not the most, successful gold exploration companies, will be with me. Last year, in 2019, they made a fantastic discovery. What has been amazing about this company's performance is the consistent drill success they've had. Already the company has established wide disseminated gold mineralization, wide intersections of disseminated gold intersections of mineralization, and interspersed by very high-grade sectors as well. So, and this is along a 5-kilometer long fault zone, which already has the magnitude potentially to compare with some of the larger, better-known world quality mines, gold mines in the world. So very, very exciting story there. We'll be talking to Chris in the second segment. So Chris will be with us, but right now, and Alistair will be with us in the second half. And right now, though, I'm really happy to tell you that Michael Oliver is back with us again. Thanks for joining me, Michael.
Hi, Jay. Good to be back.
It's really good to be back, but these are strange markets, I would suggest. The equity markets last week looked like they may be in trouble, but despite the coronavirus and all kinds of other troubling things going on around the world, the equity market's on a tear. What do you make of it?
Well, I think it's time to look at an element we don't look at usually in our reports. We don't deal with fundamentals too much. We're strictly technical. But I do, my background is I'm a libertarian, and I've even written a book on the subject. But right now, I think you've got to look at the politics of the day, because whenever there is an assumption that is as large as the assumption that Trump has this thing in the bag, and also the assumption that this is Trump's bull market, and he can take credit for it. That is the largest, most solid assumption I've ever seen that has implications for market. For bulls, for sentiment, and so forth. And even the Democrats think, gosh, how can we stop this guy? He's got a bull stock market, and look at the good economy, quote unquote. And there's a lot of falsehoods in that. And whenever you have an assumption that's that popular, it is an assumption that is accompanying the bubble that is that big. Yeah. And this bubble didn't begin with Trump. Trump merely added 3 more years to it. I mean, what are we going to call 2009 through 2016? The Obama bull market?
Right.
No, I don't think Fox Business News was doing that then, but now it's Trump's bull market. Okay. Yeah. We had a visual picture of the S&P 500 price chart without using price. We constructed a cartoon version of it that looked like a plywood and plaster skyscraper. In other words, it wasn't made of concrete and steel. And on the outside of it were the faces of the various Fed governors along the road, Bernanke and so forth, that helped sponsor this beast higher. And, your other Alistair's talking about this issue of the inflation and the deflation issue. That rotates. We have constant monetary inflation. Since 1959, money supply doubles almost, M2 doubles almost every decade. And it goes somewhere. Now, sometimes history, if you will study history, it goes into stocks, sometimes it goes into commodities, sometimes it goes into real estate, if we recall 2007 and 8. But they're bubbles, and they're created by monetary excess, artificial interest rates, and government policy. And frankly, as a libertarian standing outside of these two political parties that swing back and forth, I see little difference between what Trump advocates on economics, which is a major thing in human life, in terms of monetary policy being aggressive, in terms of interest rates being lower than other nations' interest rates. Why? Because, quote, we're number one. I don't see much difference between Paul Krugman and Trump's economic views, frankly. Yes, there's the window dressing of a tax cut, but otherwise he wants to spend money, take the deficit up, infrastructure, et cetera, et cetera. I see very little difference. But anyway, what had just happened in Iowa was very telling, because as we know, the Democrat Party, obviously they want to win, but they also know they're split. And of course, so is the Republican Party to some extent. Trump took it over. It's no longer an intellectual conservative party anymore. Now it's the Trump Party. But the Democrat Party is badly split. And I think the orthodoxy in the party definitely don't want Sanders to win. And it was funny that a day before the Iowa caucus, I think it was the main newspaper in Iowa has a poll every year, one day before Des Moines paper. And they didn't have it this year because they canceled it because some errors might be in it and so forth and so on. And then all of a sudden, the same thing happened with the caucuses, effectively. In other words, they don't want to show Sanders winning this thing, because then it creates a problem for the hierarchy of the party. That party could get really badly split. Now, right now, the assumption, therefore, would be what? Trump's got this in the bag. The Democrat Party's split, and so forth. Watch out for Bloomberg, though. He's rising from above sharply on the charts as a middleman. But the big assumption I think you got to watch is the vulnerability of the stock market, because our work says, it's beating its chest and it looks great right now, but momentum-wise, it doesn't look great. It has massive structures to break below it. It started to break some of them this month, despite this rally today. And I think if you sneeze again on the S&P, like go back through the monthly low, which was down at 32.35, on the S&P, I think you can start to unwind it. And I think at that point, that most popular assumption out there that I've ever seen, political assumption that has market implications, could be burst.
Yeah. Well, it certainly seems like it. Republicans, Fox Business, Fox News are all championing this wonderful economy. And I certainly, when we have David Stockman on this show, he's not blowing that horn. He doesn't buy it for a minute. Neither do I, frankly. I think a lot of that is, baked in by the statistics that governments are, in a self-serving manner. All administrations do it. Obama did it as well, bragging about the economy. And then in the meantime, you have a middle America that is just replete with drug addiction and unemployment and people stopping to look for jobs. So things are not what they're cracked up to be. This is not. I'm sorry to say. I wish I could go along with the enthusiasm of the Republicans, but I have a hard time doing that as well. Michael, with just about a minute and a half or so left here, where does this leave gold?
I think gold is on the way north. I think the key number to watch right now is simply a return to 1,600 traded. That's the April contract. And we got up to 1582, I think, last week on the close. Now we're back down $20 or so today. But stand back and look at it. Go back to 2011, watch the drop, then the 2015 low at 1050. By the way, we've run spread charts on gold versus the S&P, in other words, relative performance. And you're not all that big of a difference. If you go back to the 2015 low in gold at 1054, I think it was, and look at it now, and go back to late 2015 when the S&P was also making a low, in January and February of 2016, and look at it now. Yeah, the S&P's beat gold, but not by all that much. And yet nobody notices that. All they see is this stellar bubble that goes on forever and has the one assumption now under it that can't be burst.
Mm-hmm. Yeah,
anyway. And by the way, all those stats you mentioned that people look at, the monthly issued type things. I've never seen a bull market top that started with big negative numbers. The negative numbers follow the market down. They don't take the market down.
Yeah, good point.
The market goes down, then the numbers change.
Right.
Not the other way around.
Yeah, that's a good point. The markets lead the way, that's for sure, and the politicians sort of fill in the gaps. They have to eventually pay attention to reality, I suppose, to a certain extent. Anyway, you mentioned just looking at a statistic that I wasn't aware of until just recently. One of our guests, David McElvaney, pointed out on our show that gold actually outperformed Warren Buffett's performance during the first 20 years of this century. It's pretty amazing by quite a large margin, actually. Just gold bullion. Incredible. So it's not that gold has gained value.
It suffered a major bear market during that process. And yet
that's right.
Itself. Yeah.
Absolutely. All right, Michael. We'll look forward to talking to you very soon. And thanks again for your insights here. A little different from you today, but we'll look probably to get back to your momentum and structural viewpoints sometime in the near future. Thank you so much for those thoughts, Michael.
Thank you, Jay.
All right.